All right, just waiting for a few more people to join. Just made this live. So to everyone who's joining right now, we're just waiting for a few more people to come in. I'm seeing the attendees move up quite quickly, so it's great. I'll give it another minute or two. Okay. Check the camera, please. Sorry, guys, I think the camera just cut out. Just turn it back on. There you go. Okay. All right, guys. So welcome to the webinar. Thank you very much for joining. We, again, had a lot of people show up. So it's fantastic. Thank you very much. This is definitely some great demand for this. So thank you very much for your support and thank you for joining. All right. We had, I think almost 100 people sign up this time around. That was awesome. All right. Thank you very much. All right. So this webinar, what we're how to use Python and how to use data science in a financial context, right? And why do you want to know this stuff? Basically, you want to know this stuff so that A, you could do better in your finance job or get a job in finance, right? Because a lot of jobs these days actually require this sort of skill set, right? So that's why we teach it. This is what we do, right? So let me share my screen with you guys and we can get started with the presentation. All right, there we go. Okay, perfect. So as I said, we're going to be covering the topic of an introduction to data science for finance, right? And essentially, our agenda is going to be, I'm going to walk you through kind of the intro of Lumi Wealth and our courses and kind of what we do. And then we're going to go over what data science is and kind of the details behind it. And then we'll go over the tools that we're going to be using, and then kind of our main project, which is analyzing stock market returns versus economic data. So we're going to be looking at S&P 500 in particular and comparing that to a few different economic indicators and seeing if we could find some way to figure out when's a good time to invest and when not, right? Or if there's some sort of correlations there, right? At the end, we're going to be doing questions. So there's a little button at the bottom of your Zoom meeting there that has questions there. I think it says Q&A. Make sure that you remember to put your questions in there. If you have any questions now, put them in now. If you have any questions throughout the course, don't wait until the end. Just put them in throughout, and then I can go back and I can start answering a lot of these things, just so we're not waiting a ton of time at the end. All right. Okay. So a little bit of an introduction. So first of all, who am I? Why am I sitting here? Why should you listen to me? Right. So my name is Robert Grezik, right? I've been programming computers for about 20 years now. It's been quite a while. I was one of those kids that started when he was like 12 years old or something like that. Started my first software company when I was 15, right? And essentially basically been managing teams for quite some time now, where I was teaching teams and everything from C and C++ to back in the day, PHP, Ruby on Rails, Python now, more recently, JavaScript. So definitely gone through a lot of different languages and really hired a lot of people in the software world. And more specifically, also spent the last few years of my career working on Wall Street at some of these large banks and startups, essentially building out their software teams. I've created teams where we've actually managed, $6-7 billion worth of deals going through. We've built all sorts of machine learning applications. We actually, I was one of the founding members of Voyager, which is one of the top crypto brokers right now. So yeah, definitely have a lot of experience in doing this. Hired a lot of people that maybe are in your position that want to get into the finance world. So this is definitely something that I know well, right? Okay, so that's who I am. Lumi Wealth is essentially, it's a company that myself and a few others founded. And what we do is we teach people how to code specifically in the finance industry. So we have a niche. We're quite a bit different than a lot of these other coding boot camps that you'll see online or in person. And the main thing that makes us different is that we have this focus on finance, right? So if you want to get a job specifically in finance, we'll teach you not only the data science part of it, but specifically how to apply it to the finance world. And then also if you're interested in trading stocks and things like that, then we can also help you out with that as well, right? That's specifically what we do. It's where we're more of a niche organization, right? So our website is lumiwealth.com. So you can go www.lumiwealth.com. And essentially we have our main course that we sell is our Python for Finance course, right? So that's this one right here. Okay, so you can go to our main website, click on best selling course, and you'll be able to see more information about it. Okay. On this page, we have all of our different courses that we offer or specific types of classes, right? And then below, you'll see that you can get a brochure, right? So if you want to learn more about the course and kind of the details of what we teach, you can get the brochure here. And then also importantly, you can book a call here that you can actually learn more information. I know some people, they don't like to read too much. So feel free to hop on a call with us and we could explain to you everything that you need to know, all right? Okay, and then so for the Python for Finance course, essentially what we do is we teach you kind of like what we're going to teach you right now, but we also go much further into depth, and we also will teach you how to code in Python if this is something you're not familiar with either. So if this class goes a little over your head, that's fine. If you come start with our course, and that's exactly what we work to do. We teach you the Python skills, and then we teach you how to apply that to the finance world, right? So now, we have essentially 4 different plans that we offer. Our first plan is videos only. So it's not going to be live. You're not going to be interacting with anyone, but you'll have access to our videos. You'll have access to our code. It's only $150, and you'll be able to go through and essentially learn a lot of the stuff on your own, right? One of our best sellers right now is our live classes, and that's the one here, a little bit darkened in the middle. This one, I got to tell you, we're going to be raising our prices very soon, actually, because we've had some very high demand for this. So in order to keep the quality high, we're going to be raising prices soon, specifically next week, right? So if you guys are interested in signing up for this live class, which is essentially, it's a one-to-many, it's kind of a similar format to what we're doing now, except the other students can also be on camera, and it's a lot more interactive, right? Starting in October, you can click here to learn more if you're interested, right? It kind of tells you the details of when we start, and it's a 12-week course, all that sort of thing is in here. Course information starts on the 22nd, right? And I believe that's a Wednesday. It's every Wednesday at 8 p.m. Eastern, right? So this is one of our top courses. You can go through the curriculum there. Basically, we teach you how to code Python, and then we'll teach you all the way up until making your own algorithmic trading bot, right? So we'll teach you from Python to the data science skills, to how to apply that to finance, to backtesting investment strategies, and then to build out your own little trading robot, which first of all is great if you're an investor, but also is very good if you're applying to jobs, because it's a great resume piece to have on your resume, right? Okay, and then we have our project and our tutoring plans, which this is basically you get one-on-one tutoring help. It'll either be from myself or it will be from another highly qualified instructor. And basically the difference between project and tutoring is tutoring, you have more hours than project. These classes, guys, they're, if you want to compare this to something like a Harvard, which is around $2,000 or $2,500, right now we're actually sitting, at quite a big value compared to that, right? Which is exactly one of the reasons why we're raising our prices, right? But yeah, so we like to say that we're like a Harvard education, but more specific and more cost effective, right? Okay, so enough about our plans. Let's go back and get back to our slides here. So yeah, so I mentioned we're raising our prices. Another thing that you guys might also like, there's a free course that we offer. So if you scroll down on our .com, our main page, lumiwealth.com, over here, winning at Python, get started with Python for free. This is a free course. If you click on it, essentially you can get started, and it's the first, I believe, 2 or 3 hours where you can actually kind of get your feet wet in Python and get started. So a lot of people use this course, and I recommend you to check it out if you're brand new, right? Okay. So the code and the recordings of today's lessons they're going to be in this course, right? So we take all of our webinars, we put them into the course. This is also going to be live on YouTube. I believe it's right now we're streaming live on YouTube, actually. And so you'll be able to get the video, but if you want to get access to the code, you will have to actually sign up for the course, right? So even the videos only course, that one will have the code for this webinar and for the one that we did 2 weeks ago and any that we do in the future as well, all right? Okay, and one more thing to cover before we jump into it is that there's gonna be a survey at the end of the webinar, so please stick around for that. Love to get your feedback. So how can we actually make this better for you, right? That's what we're looking to learn, right? So please fill out that survey at the end. It's gonna help us keep improving this webinar. It's gonna help us keep making this, this better for you, right? So one of the reasons why we're actually doing this course this time around is because of your feedback. We asked you guys what course, what topics you'd want to cover next. And this was what most people requested, right? So that's exactly why we're doing this. We're listening to your feedback. So please fill out that questionnaire so that we can continue to make this thing better for you and continue to improve for you guys, right? Okay, so let's get into it. So what is data science, right? So for those of you that don't really have much of a background in Python or in data science, this is something that that maybe would be a good thing for us to cover. So what is data science? It's essentially is using data to analyze problems, right? So why is that important? You know, the amount of data I believe lately has been doubling every 6 months on the internet. Don't quote me on that, but something every 6 months or every 8 months, all of our data in the world doubles. So imagine having a skill where you can actually analyze all that data and make sense of it and be able to make business decisions off of that. That is an extremely valuable thing, and it's something that's growing very quickly in our world. If you guys ever look at the jobs in data science, it's one of the fastest growing professions. It pays very well, and honestly, companies can't fill these slots fast enough, right? So essentially what we're doing is we're taking all this data and we're making sense of it within companies, from social media, from, you know, within banks, you're going to be looking at defaults, you're going to be looking at transactions. There's all sorts of data that you can look at, and it's just growing faster and faster and faster. And this is something that is a very valuable skill these days, right? So you're gonna be able to analyze data to solve problems. It's basically like statistics, but supercharged, right? So imagine, you know, statistics you learned kind of some of the basics of being able to tell if something's statistically significant or not. That's kind of the main thing that people learn, p-values. This is taking it to a whole new level, right? So imagine doing that, but with, you know, hundreds of millions of different transactions, being able to use machine learning, artificial intelligence to figure things out. There's a lot of very, very cool stuff that you can do with this. So it's really supercharged statistics. You're also using data to predict things. So for example, predicting stock market returns, predicting default rates, predicting insurance, whether people are actually going to file for insurance. There's a whole slew of things you can predict using data science. And essentially, I think a great way of thinking about this is, you know, Excel was the tool that everyone used back in the day, or I guess still people use it. We use it in tandem with our courses, but this is a whole new level of tool. So remember, back in the day, you're applying for jobs. Excel was one of those things that was absolutely mandatory. This is now becoming a mandatory tool, right? And I don't know if you guys have been looking at these job postings lately, especially for banks. Pretty much it's required for you to know Python and data science at this point at a lot of the major institutions, right? So it's essentially just a new tool. It's a much more powerful version of Excel, right? Okay, so people also talk about, you know, so typically for data science, people use Python or use R, and we get this question often, why don't you teach R? You know, R is another very popular language, and there are good use cases for it, but to be honest with you, for the most part, Python beats it on almost every front, right? It's better because, first of all, and why do we teach Python, right? We pretty much exclusively teach Python. So first of all, it's more popular, which means it has a larger ecosystem, which means there's more jobs out there, which means there's more tools for you to use. It's essentially a bigger ecosystem. It's been out for longer, I believe, as well. And there's a lot of tools and everything available for it, right? You can, another big thing about Python versus R, and this is probably the big one, is you can actually build programs with it, right? So when I say build programs, I mean, you could build things like trading robots. You could build a trading robot using Python. You can't really do that with R, right? You could build web servers with it. You could build an entire website with Python. You cannot do that with R. You can automate tasks, right? So for example, automate things on your laptop and just have it run on a regular basis. This is not something you can do in R, right? So Python is a much more powerful version and can pretty much do everything that R can, right? So we just decided to just stick with that. And I suggest you do the same as well. Another really important thing is there's more jobs, right? There's just simply more job postings for Python than there are for R. So again, just really beats it on almost every front, right? Okay, so let's talk about some of the tools that we'll be using in today's lecture. All right, so we're going to be using, of course, Python, but then we're going to be using pandas within Python. This is probably one of the #1 tools that people use for data science. It's that whole Excel supercharged. Everything kind of looks like an Excel table, and I'll show you what I mean by that in a little bit. But essentially, it's like allowing you to do really complex operations on large amounts of data. Then we're also going to be using Pandas Data Rater, which is a very important tool as well. A lot of people use this one. Basically what it is it connects to a bunch of different, what we call APIs, or connects to a bunch of different companies, so that we can take information from different sources, right? So it connects to things like Quandl, connects to things like the Federal Reserve. So Fred is going to be something we go over. It connects to all sorts of stuff, right? So basically it makes our job a lot easier, and it works specifically with pandas. So it's super simple. It's 2 lines of code and you have GDP information. It's 2 lines of code and you have stock market information. It's really fantastic. And not only is it, they get the information, but it's specifically formatted for pandas, right? So it really makes your job very easy, makes it very easy to modify, and highly recommend using this tool, right? Another thing that we're going to be using is matplotlib, although not too heavily, but it's essentially the way that we do graphing in Python. It's the main way to do graphing in Python. I should say there's other ones as well, but this is kind of the main one. Then we're also going to be using Yahoo Finance, which is going to be getting us information on our stocks that we're going to be working with. We're going to be using FRED, or the Federal Reserve Economic Data. And this is, I give you a website here just to show you. These guys have a crazy amount of data in them. So if you want to do any kind of economic analysis, these are, especially in the United States, this is really the place to go. For example, one that we'll be going over is consumer price index, right? So inflation rates, okay? This is the consumer price index, inflation. This is seasonally adjusted, but then you could also look at other ones as well. You can look at real gross domestic product, right? This is how it's been going throughout the years. See this nice cliff that fell off recently. So you can actually see how that's actually quite bad, the most recent economic downturn. But yeah, this is a great place to get a lot of economic data. So we're going to be using this as well. And in conjunction with Pandas Data Reader, Pandas Data Reader automatically connects to it. And then, yeah, and there's a lot more tools. This is kind of, like I said, the basics. This is, if you go through our courses, you should be able to get to this point within the first 2 weeks. Most of the students that start with us, about 2 weeks into it, they're able to build out what I'm about to show you right now. Okay, so it's kind of the beginning parts of it. We get a lot deeper in our course down the line. All right. Okay. So kind of our main project here is we talked about, we're going to compare stock market returns versus economic data. So specifically what we're going to do is we're going to be comparing inflation, or CPI inflation, right? So kind of the typical measure of inflation. So for those of you who don't know what inflation is basically saying, if I had $1 back in 1950, it's not worth the same amount as $1 today, right? $1 back in 1950, you always hear that saying, maybe your parents are saying a nickel back in the day could have bought a chocolate bar, right? Definitely can't do that today, and that's because of inflation, right? So it's a very significant economic piece of economic data to look at. All right. We're also going to be looking at debt. More specifically, we're going to be looking at debt in relation to GDP, right? Debt levels alone don't mean anything, right? Because again, everything is relative. Just like inflation changes the value of a dollar, GDP is going to change the value of debt, right? So this is a very important ratio for us to look at, and something that a lot of hedge funds and a lot of people in the field will look at as well, right? We're going to be looking at specifically debt to GDP in the United States. Okay, and then we're also going to be looking at the stock market, and we're specifically going to say the S&P 500, or you could look at SPY, but we're going to look at the S&P 500 index itself, so that we know essentially how the stock market is doing. And we're going to get that from Yahoo Finance, right? And then the main question is, how does inflation and debt affect the stock market? That's what we're going to try to answer. And we're going to try to show you that in a couple of different graphs and show you how there actually is a relationship, right? And it's something that is actually pretty significant, right? So when you see it, it actually does look pretty cool, right? And you could do your own analysis. There's many other things that you can go through. We're just choosing these because I know that there's something that matter, but there's also going to be many other metrics that you can look at as well, all right? Okay, so let's get into it. All right, so first thing, what we're using here is we're using Jupyter Notebooks, okay? And for those of you that are not familiar with Python or data science, this is a tool that pretty much everyone uses in the industry, right? It's a really easy way to visualize data. If you take any kind of tutorials on Python and they don't teach you Jupyter Notebooks, I find that very odd, especially in data science. This is something that pretty much everyone in the industry uses, right? And what it is basically you put code inside of each one of these cells and then you hit run to make it run. That's about it, okay? So first thing we're gonna do is we're gonna import all of our different libraries that we're gonna be using, okay? So we're gonna be using pandas, as I mentioned before, it's one of the libraries. We're gonna be using pandas data reader, okay? We're gonna be using datetime, right? Which is a very popular Python package. We're gonna be using Yahoo Finance as well, okay? We're also gonna be using matplotlib, but that's already included in pandas, so we don't include it in an import like this, okay? So we want to run this. Hello, can you guys hear me now?
Yes.
Okay, now you can hear me. Okay, sorry guys, we're having some technical difficulty there, but now I believe we have the audio back. All right, sorry about that. Okay, sounding good? Okay, all right. So I'm not sure where we cut out of the sound. Alicia, do we have a time where we lost the sound?
Around 6:55.
6:55. So where were we? So I'm going to go back over this again, guys, just to make sure that everyone heard it. All right. So essentially, we imported all of the packages, all of the libraries, right? And then what we're doing now is we're getting the inflation rate, okay? And we're starting off from 1900, right? And that the reason why we're doing that, the data doesn't go back that far, but essentially we want to get the data from all the way back in 1900 because it will just automatically adjust and pull whatever data is closest to that, all right? Okay. In our case, which is 1940 something, right? Okay. And then again, we're using CPI AU CSL, and that is when you search in Fred here, okay, there's the consumer price index. You can see this is exactly what we're pulling, okay? So we're pulling the consumer price index, and the reason why we're using this one is because it's all the way back to 1947, which is some of the longest data that things go back by, okay? It's hard to find CPI earlier than this, okay? All right, so we're using, again, pandas data reader to pull down this information. Pandas data reader being PDR here, right, where we imported it, right? And we're pulling this CPI, and we're pulling it from Fred. We're pulling it from that start date, 1900, all the way until now, okay, which is our end date, okay? So when we pull this, you see what happens is we get back, and the reason why pandas data reader is so great is because it's doing a few things for us. It's pulling all of this data for us from the website automatically, so we don't have to save it as a CSV and move files around or anything like that. It really makes our lives a lot easier. It's also going to make it very easy in the future when we have to update things. Let's say we want to look at this again in a year or two from now, then it's going to make that very simple, right? And also it puts it into a pandas data frame all ready for us as well, and does that literally in one line of code, right? So it's a fantastic tool to work with, okay? So we pull that inflation data, display it, and essentially what we get back is called a pandas data frame or a data frame for the pandas framework, okay? And that is essentially this kind of table looking thing here. It's very similar to Excel, as I mentioned earlier, right? Where we essentially have the date, which is our index, and the data here for each month. So in January 1st is what CPI was, February 1st, et cetera, right? Okay, so now we have inflation. The next thing that we want to do is I create a little function here that makes things annual, okay? This is a pretty simple function. Really what it does is it takes the year from each one of the cells and only keeps the first date, right? Or sorry, I think it keeps actually the last one, right? And essentially what that's doing is it's saying that this is the most recent CPI that we have on that date or in that year, right? And we're able to compare. So even if we have some data that's annual, some data that's quarterly, some data that's monthly, some data that's daily even, it all comes down to just being annual, right? So this is a way of what we call normalizing data, okay? So that's what this little function does here, okay? So we're going to take all of our data from here before, where it was monthly, we're going to convert it over to make it annual, okay? So we're going to run this and then run this, okay? So we see now our CPI in 1947, it was 23, which again was the last inflation in 1947, okay? All right, and then 1948, et cetera, all the way up until today, which is the most recent that we have for 2020, okay? All right, and then to show that a different way, this is using matplotlib. All you got to do is take that data frame, and then specifically we're looking at this column, CPI, AUCL, and we're saying plot, okay? And that's going to graph out a nice little graph for us, okay? But of course, this isn't that valuable to us. It's basically just a line going straight up. It doesn't really help that much. What we really want to know is we want to know when was inflation changing the most, right? That's the thing that really makes a difference, right? The level doesn't matter. It matters how quickly was inflation rising in that specific year, okay? So the way that we're going to do that is we're going to calculate the change from year to year. And again, pandas makes this very simple. It's just one function here, percent change. Okay, so we're going to go inflation dot percent change. Okay, and we're making a new column for that. Okay, so you'll see here when we run it, we now have the inflation level, and then we have the rate of change per year. Okay, so in 1948, inflation changed by 2.7%. Okay, in 1949, it actually went down, right? We had deflation of 1.8%, right? And this is kind of the numbers that you're more used to hearing quoted on the internet, right? Or in news broadcasts when they say inflation is low, inflation is high, we're worried about deflation, inflation. These are the numbers that we actually care about, right? Okay, so let's plot that out. And this is going to look more like it, okay? So basically what we see here is that we had very high inflation in the 1970s, right? So this is when, if you guys are old enough to remember it, I certainly wasn't, I wasn't alive back then, but for anyone who was, or anyone who's read about it in the history books, the 1970s was a period of very high inflation, right? Where we had interest rates somewhere around, imagine going to get a loan, imagine getting a home loan of 12% or 15% on your mortgage. Imagine that was the case. That's what life was like in the 1970s. It was not fun. It was not a good economic time, and the stock market did not do very well during that time period. And we can actually show that in our graph. So we'll show that to you in a bit. Okay. Right. So now we have our CPI over a period of time, our inflation. Okay. Now the next thing we said we want to get is the federal debt. Okay. So federal debt, we're going to be pulling from Federal Reserve again, right, from Fred, and we're going to be pulling this indicator here, GFD, right, a whole bunch of letters there, right? I'm not even going to try to say them because I'm going to get them wrong, but we copy and paste it, stick it into here, into Fred, and this is the one specifically, gross federal debt as a percent of gross domestic product. Okay, so again, why are we using this one? First of all, it goes back all the way till 1939, which is amazing, right? Again, we want to have as long of a picture as we can. And second of all, they already do the work for us where it's divided by, it's the debt divided by the GDP. They already do that work for us, okay? We can do it ourselves as well. It's not too difficult. It's in pandas. It's very simple. You just use a divide function. You get both of them, you divide them by each other. It makes it very easy. But that could be something for another time. If you sign up to one of our courses, then we'll actually teach you how to do all that sort of thing, because some of these metrics aren't exactly the way that you want them to be. You want to have some sort of ratios and whatever, and we teach you exactly how to deal with that in our classes. Okay. All right, so we're going to get the debt to GDP here. So let's grab that. Okay. And again, this is going to Fred, pulling that information, and it's bringing it back into Pandas data frame, and it's showing it to us on a monthly basis. Okay, so this is our debt to GDP on a month to month. Okay, more recently, it's pretty high, right? As you can see, 2019, there's only annual data, right? Doesn't include all the crazy amount of spending that happened recently, right? This number is probably much higher right now, given the many trillions of dollars that just got spent. But it's still going to give us a good picture because we've had a lot of debt being taken on since 2008, really. Okay, so let's graph that out. But before we graph it out, let's do a couple things. Let's use that same function. Let's make it annual. Okay, right. So this way it matches up to our other data. It's going to be very easy for us to work with it together, right? As I said, the other data that we had was monthly. This one's annual, so it just makes things simpler. Everything is just made annual, right? And another thing we're going to do is we're going to rename this column, right? Just because this GFDG, it's a bit hard to read. Let's just call it Fed debt to GDP, right? A little bit of an easier way of saying that, right? So, okay, so now we get this debt to GDP, and let's print that out. And this is essentially the our data frame of every year and the debt to GDP ratio. Okay. All right. And let's graph that out as well. Okay. So now we see that nice graph. It looks very similar to the graph over here, right, from their website. Okay. So great. So we have our debt to GDP. We have our CPI. What we can do now is let's plot them together to see what they look like on the same graph. Okay, and you can see here, these two seem to be related to each other, right? You can see that basically when CPI is high, debt is low. When debt is low, CPI is high. One of those the adages in statistics is correlation does not imply causation, right? So they're correlated. We can't necessarily say one is causing the other, but there's definitely a correlation here. And you could see it just even just visually, you can see it. We don't even need to run any kind of statistics. But again, if you go through our course, we'll teach you actually even how to run the stats on this as well. Yeah. All right, so now that we have those two things, now we want to get information on the S&P 500, right? And the way that we do that is we're going to use Yahoo Finance. So this is another library that we imported back up top here, okay? Our Yahoo Finance, we named it YF, okay? And we're going to pull some information from them, and they also make things very easy for us. It's basically a ticker symbol is GSPC. That is the S&P 500 on Yahoo Finance. If you actually go to the website, you'll be able to see that. Okay. So first we get the ticker, right? And then we get the history, and we want to make it, the period is max, right? Because we want to go as far back as possible, okay, in this case. And also another thing we do is we only want to get the close, okay? They're going to send us a lot of information at Yahoo Finance. They're going to give us the open, high, low, close. We really just want the close, okay? And then again, we run it through the make annual function so that everything is lined up, okay? So when we run that, we have here every year where the S&P 500 was. So imagine right now the S&P 500 is at 3,000. In 1927, it's only 17. So imagine if you just put some money into that, you'd be very, very rich if you put your life savings into S&P 500 back in 1927. Okay, and let's plot that out. Okay, but again, just with CPI, this doesn't really mean anything. This is just a graph straight up. What we really want to know is we want to know the change, right? When did the S&P 500 do well? When did it not do well? This is absolutely meaningless to us. All it is just basically a check mark, right? So what we want to do again is we want to do the percent change, same way that we worked with the CPI, okay? So on the close, we do percent change, and this is going to give us something that makes a little bit more sense, okay? So it's saying on each year, so 1928 was a very good year for the stock market. There's a 37% return. 1929, it dropped, and then we had basically a Great Depression here. 1929 is when it all started, right? 1930 was a very bad year. 31 was a very bad year, and so on, right? So these are the values that we actually want, right? We want to know, did the S&P 500 do well or not, right? Because that's what's actually going to help us figure out, are these indicators actually making any kind of a difference, right? So we're using that change there, okay? So when we plot it out, it looks a little chaotic, right, to say the least. This isn't really making a lot of sense to us, okay? But we could plot it out a different way. We could plot it out as a bar graph. This maybe looks a little bit better. We see that there's some times, like this is a better time for the stock market. If you see my cursor, it's a better time. This is a better time. These are bad times. These are bad times. But again, this is still kind of hard to look at, kind of hard to visualize. So one really easy way to do this is what we're going to do is we're going to pull a rolling average, right? So basically it's going to take the average return for the past 5 years. We're going to do a rolling average of 5, just because it gets rid of a lot of the noise. You can play around with different time intervals if you want. I found 5 made it pretty good, gave us a pretty good result in terms of how the graph looked, right? So that we can actually see, get some sort of information from this, right? And when we run this, you see we have a new column now, average change, okay? We had before just the change, and we have the average, specifically 5-year rolling average, okay? And then we can plot that out. And this kind of makes a little bit more sense, right? So now when we look at this, we see kind of what we saw with those bar graphs up at the top, but it's much easier to visualize, right? We see 1939, these are bad times for the stock market at the beginning. This is the Great Depression, things were not going well. We see the roaring 50s, right? This is a great time for economic prosperity in the country. We see the time when there's high inflation, the stock market was not doing well. And we see the tech bubble there up until 2000. And then some of our more recent massive gains. You see the stock market just shooting up like crazy recently, okay? So this is actually something that makes a little bit more sense, okay? So now let's get to our final conclusion, right? Let's compare this to the essentially how the how inflation stacks up to this and how debt stacks up to this. Okay, so first let's do debt. So let's compare a graph of the S&P 500 versus the debt to GDP. Okay, and you tell me if you see a correlation here. All right, so that's pretty darn close, no? So what this is telling us, again, correlated, not causal, right? But it's definitely telling us that there's a relationship here between the amount of debt that we have in the country and the way that the stock market is returning, right? We could potentially say that whenever we increase debt, the stock market does well. And to be quite honest with you, if this year was any kind of indication, then yes. This year was a very good indication of that, where we really took on a lot of debt and the stock market just took off like crazy since then. So we definitely see a pretty strong relationship here. And you can see that this relationship has been around since the 1940s. Like, this is not something new, right? So, you know, kind of my thoughts, and again, this is not investment advice for legal reasons, but in my world, you know, whenever we see that the government is going to be spending a lot of money, we can probably bet that the stock market is going to do quite well, right? Okay, so that's the first one there. And then next one, let's compare the S&P 500 to the rate of inflation. Okay, so remember that CPI. Okay, and we actually also see a relationship here as well. And we see actually a negative relationship, right? Where we see periods of time when inflation, the blue line, is very high, the stock market didn't tend to do very well, right? So that actually makes sense why the Federal Reserve, they have a mandate now, since the 1970s, they've had this mandate that they need to keep inflation low, which is why they've been saying they have inflation target of 2%. This is why it's so important, because when inflation gets too high, the stock market does not do very well. And we can see that through our graphs, okay? So probably that's also another reason why the stock market's been doing very well lately. It's just we've had low inflation. Low inflation means low interest rates. It means that the value of a dollar sticks around. It means a lot of very good things for the economy. So this makes a lot of sense, all right? So we have two good things here that we could actually use to potentially forecast stock market returns is the inflation and the debt, right? And we're able to show that with these graphs, right? Okay, so that's it for our presentation, really. Let's take some questions, right? So I know you guys were posting questions earlier, and it was really about the volume, right? I'm gonna say no audio, no audio. If you guys want to, I'm gonna dismiss all these ones around no audio. But do you guys have any questions about anything other than the audio? So we can have questions about the techniques that we're using. Maybe you guys like to know more about the techniques. Maybe you guys have some questions about our classes when we're getting started and all that sort of thing. Let me know. I'm gonna wait here a little bit, let you guys type it in. It's basically that little Q&A button at the bottom. All right, I'll give you guys some time to type that. All right, and I'm gonna check the chat as well to make sure nothing is in there. So remember last time one of you guys asked in the chat and I didn't. Okay, so there we go. Okay, so we got a question here. All right, so thanks for demo. What are the topics covered in your training sessions? Okay, sure. So a couple things that we cover in our training sessions. So first of all, if you have no background in Python, if this just seems like complete foreign language to you, let me actually hit this answer live. If you'd like to answer this question live, okay. So, so first of all, if you don't know Python at all, if this is complete foreign language to you, we will teach you that. We'll teach you everything from scratch, right? So if you know you've never programmed a day in your life before, we'll get you up to speed. We'll teach you Python. Once we teach you that, then we'll go through data science. So kind of some of the fundamentals that we went through here. We'll teach you much more than what we covered here. We'll teach you how to actually work with larger amounts of data. We'll teach you how to connect to different data sources. We'll teach you how to get data about real estate and analyze that sort of thing. We'll get much deeper into the different ways that we can analyze economic data. And of course, we'll also teach you how to get to this point, right? Because this might be right over your head. We'll definitely teach you how to get to here, okay? And then next steps after that, we're also going to go through kind of how to look at financial metrics. And actually, let me pull this up here. Maybe it might be good for me to show you our brochure, right? And actually, so here, so we'll go through our live classes, what our live class is going to go over, and we'll go over what our brochure goes over. So this is all the data science portion of it. We teach you everything Python, and then all this data science stuff here that we went over, right? Okay, basically how to work with all these data frames, loading CSV files we'll teach you as well. We'll teach you graphing, kind of some more advanced graphing techniques. I don't know if you noticed, we changed the size of graphs, we could rename things, all that sort of stuff. We then go over also using pandas data reader, Fred, the kind of stuff that we went over right now. We go much deeper into Yahoo Finance. There's a lot of stuff that you can get from Yahoo Finance, not just the returns. We teach you how to work with a lot of the like actual financial data. So you could work with that as well, right? We'll teach you how to do that. Then we'll teach you all the different financial metrics, how to do that in Python. We'll go over backtesting. So this is actually a big thing and something that a lot of people really like is backtesting your investment strategy. So let's say you have a strategy in mind of how you want to invest your money. We could actually help you see, is this a good idea or not? So we can go over past data, just like how we did with this economic data and stock market data. We can go over past data and see, is your strategy something that would have worked over time, right? And this is something that could save you a lot of money, right? And I know all my strategies I've back tested all of them. I could tell you this year was a very, very good year for me, for us as a company, actually, because we manage money for a bunch of people as well. Our investors did extremely well this year. I think we made 40% this year, something like that. So it's been a very good year. And that's really with some of the stuff that we learned from this course that we teach you, right? And that's this back testing section. And then we also teach you how to build a trading robot, right? She'll show you how to essentially connect to a broker and automatically execute on things, right? Which is really cool, right? So, you guys might have seen our ads going around Facebook and basically, it's true that today's traders, it's really hard to compete against what's out there. I think it's 70% of the stock market, 70% of all trades is done by robots, right? It's crazy. Like when you're trading on the stock market, you're not trading against people, you're trading against machines, right? So this allows you to actually fight back against that and to actually stand a chance in winning some of these deals, right? So we can teach you how to build trading robots that trade off of Twitter information and all sorts of really cool stuff. But basically teach you how to build the bot out here, okay? And then, of course, if you sign up for our tutoring or our project plans that we have there, then we'll actually sit with you one-on-one and we'll go even deeper into subjects and we'll help you with whatever it is that you want to build, right? Some people want to build like some cool machine learning stuff. Some people want to get better at their jobs, right? Maybe you want to go work in lending. Maybe you're an underwriter in lending and you want to get better at that. We'll help you with that. This is, we've been working in this field for quite a while, myself and our other instructors. So pretty much anything finance and data science and programming related, we can help you out with, right? So that's really what those additional plans are for. Again, over here, the project and the tutoring, right? You get that one-on-one support, okay? But that was a live class I just went over, which again, the live class will be similar to this, but much more interactive. You'll be on video as well, and we'll be talking back and forth. There'll be assignments. You guys can work together as groups and communicate as groups. It's gonna be a lot of teamwork, right? So that live class has really been a big seller for us as well, okay? So I hope that answered your question, okay? All right, so another question, how much of machine learning topics do you cover in your classes? Do you focus more on theory and math or application? Okay, so to answer the second part of your question first, we really focus more on the application, right? And the reason being is there's a lot of stuff out there on the math. If you want to learn more about the math, we can actually go into that with you, right? But really what a lot of employers are looking for and really a lot of students are looking for is just how to apply this, how to actually make money off this, how to actually make this stuff useful, right? So that's essentially what we teach. We teach really more application rather than math. That doesn't mean we don't go into the math, we do. But I just personally, every time I've spoken to a student, they've always told me they've gotten more value from actually seeing this work, right? And then as for the other question, machine learning topics, we're going to be making another class soon, which is really more specific on machine learning. We cover it a little bit. It's not something that we are heavy into in this particular live class, right? But we will be making another live class that's more specific to machine learning. And if this is something that you want, right, then definitely send me an email, please, and let's have a discussion on this, because we can do some one-on-one tutoring with you, and we could actually accelerate our whole timeline of putting out these machine learning courses. So it's in our timeline. It's something that we're working on. We've seen more demand for the algorithmic trading. That's why we're more focused on that right now. But if this is something you want, please let us know. Email me. Let's get on a call, and we can actually do a lot of this tutoring with you for the machine learning, and we can also build out more of these lectures and build out these live classes for you. Okay, another one. So what's the difference between personal projects live and portfolio projects project module? Sure. So personal projects live is, so really the difference between the live classes and the project is, in the live classes, it's going to be one instructor and several students, right? So there's pluses and minuses to that, right? The project is a one-on-one. So you're going to get a lot of attention from the instructor. You're going to, anything they need to have covered. Actually, sometimes when I tutor some students, they have like work assignments that they need to do, and I'll help them actually build those out, right? There's something that they're building out a project and they're stuck on it. Like I'll actually sit down and help them out with that and build some of these things out for them one-on-one, right? So you really get a lot of the instructor's time. Whereas the live classes, it's going to be several people in the class. I believe we're going to try to limit it to around 10 people, right? So 10 people per class. So you don't get as much of the instructor's time, but to be honest with you, I think it's maybe a little bit more efficient just because a lot of people's questions overlap, right? So I definitely think it's probably the more value out of the two, right? But then again, and I guess your question is also more specific to the project, right? So what's the difference between the project one-on-one and the project in the live classes? Well, the live classes, you're going to be working on this project alone. You're not going to get as much as that one-on-one tutoring support, but you will be able to ask questions throughout these sessions. We also are going to be having what we're going to be calling kind of like TA sessions. Sorry, I forget the name of what we're going to be calling it exactly right now, but it's office hours. Sorry, it's going to be office hours where you come in and you can actually ask questions as a group. It's kind of like, imagine office hours in the university, right? You can come in, ask questions. You have a certain amount of time where you can ask these questions as well, right? So that's kind of what it is you just have more time one-on-one in the project aspect. Although I will say, even if it's a group of 10, you'll still get a lot of time dedicated, and you'll be able to work on that. Also in the live classes, you'll be able to interact with other students as well. So you'll be able to get questions and answers from those other students, which we're working on building out like a little community for you guys to be able to communicate through as well. And we're sending an email about this. So we want to try to build something out, whether in like a chat format, or we're thinking Reddit, we're thinking maybe Discord, we're thinking Telegram. But I'd love to get your feedback as to how we do this, because we have a Facebook group right now, but I think we could do better, right? So yeah, anyways, that's kind of the two main differences there, right? Okay, any other questions here? I think we've answered all of them. Okay, okay, one more question. Thanks, perfect, no problem. Okay, awesome. So that concludes our lecture for today. I hope you guys enjoyed this, right? I always love getting your feedback at the end, so please answer that survey after all this. Also, please book a call with us. I'm being told here there's something else in the chat as well. Sorry, 1 second. Let me check the chat. Thank you for a quick presentation. Would you please share the Python file with us to review it and run it by ourselves to get a better sense? So the Python file is actually going to be included, as I said, in the course. So if you want access to the Python file, if you want to do that, you're unfortunately going to have to actually pay for this course. If you pay for the videos only, you'll have access to the code from this lecture, as well as our last webinar as well as the code and videos for everything else that we've covered. So to kind of explain where all this came from and how all of it works. So if you want access to the code, you're going to have to buy one of these lectures, at least the videos only one, right? If you're interested, book a call with us and we can kind of discuss some of these things further with you. Sometimes we're able even to give you a discount in some instances. So definitely book a call with us or send us an email and we can figure that out for you. All right. Okay, great. So again, thank you very much for being part of our lecture. It's always great hearing from you. Please answer the survey at the end so that we can continue to make these things better and better for you in the future. All right. Thank you very much, and I hope you guys have a good night.